Hi, this is Justin from justinkain.com, and this is 5 Minutes of Coaching. Every week I do this where I sit down and take questions and situations that I've had throughout the week, and I bring them up and we talk about them here so that I can deliver an answer, and hopefully you'll get the answers on questions that you're already having. And if you haven't thought of these questions, these are probably some great questions that you will think of. This is a question that came in this week from a guy out in San Diego. How can I get started in real estate investing with bad credit? And he didn't really have bad credit. He just is, very young. He's 22 and he doesn't really have established credit. So there's a difference between having bad credit and having established credit. So let me give you some of the history of credit, and I'm going to try to make this very, very short, but it's very important that we understand that 50 years ago, the concept of credit was very completely different than it is today. Even 20 years ago, not very many loans were actually based on your credit score. Now we're in the information age, and credit has become a very, very big thing. You can monitor your credit. You can go to one of a dozen different websites to get credit monitoring. A lot of credit cards have credit monitoring with their services. Some you have to pay for, some you don't. And identity theft has also become a very, very challenging thing as well, with fraudulent credit card purchases and all those things. So credit is something that we are all going to have to live with. Our parents, our grandparents didn't have to do it, but now we do, and we have to protect our credit. Now, if you've been in a situation that has damaged your credit, and let's say that you've missed a couple of payments, or you've been through a foreclosure, or you've been through a bankruptcy, or any one of those things, the good news is, so has Donald Trump. Investing in real estate is not based exclusively on what your credit is. It's based on how good the project or the deal is that you can get your investors excited about. So, even though credit is important, if your credit is bad, it doesn't mean that you can't be a successful real estate investor. I've had challenges with my own personal credit. With the amount of real estate that I've done, it's probably going to happen where there's going to be some projects that don't work out as expected. And that's happened to me. And so my credit is not perfect. But I work on my credit every single month. I work on making it better. I work on utilizing it. And then I also work on building business credit with banks and business relationships with banks, and from local banks all the way up to bigger banks. And I try and make sure that every single month I'm working a little bit on my credit. If you've never been through a credit building program, I highly recommend creditnerds.com. I've been through their program, and it's just a great setup, because when I went there, I didn't have to pay anything up front. I've been through other credit building programs where literally I had to pay a $1,200 upfront fee and then hope that they're going to achieve some results. With Credit Nerds, it's different. It's a small upfront fee where they go through and assess your credit, and after that, they only get paid when they actually clean up your credit. And so check out creditnerds.com. That's a great way to get started. If you've got terrible credit, then start today, because the worst thing to do is wait 6 months, because your credit's not going to get any better. If you just are starting off on your credit building journey and you're in your early 20s, perfect. Get a few credit lines, pay them off, start to build that credit muscle, because credit is like a muscle. If you go out and you do one workout at the gym, you're going to be sore the next day. It's the same thing with your credit. You go out and put some credit cards on your credit, it's going to go down. The credit score is going to go down. But as you build that up on a month-to-month basis, it's going to get stronger and stronger until you'll be a credit bodybuilder. So you can invest in real estate without great credit, but if you have good credit, you're going to get better rates, and it's going to be less expensive, and it's going to be more profitable for you. So work on your credit every month, work on your business credit every month, and really the biggest thing is to start where you're at right now. Don't start where you want to be, start where you're at right now. This is Justin from justinkain.com. Check out my website for more ideas and tips.